This lesson is on accounting utilities. As you can see, we're in the table of contents, and we're now up to Chapter 4 in the new client handbook. So, quick review, we've covered the maintenance section. So we got all of our accounts set up. That's where we basically do our initial setup, all of our accounts, all of our budgets for the year, etc. And then we have accounting transactions. Well, we went over our day-to-day transactions, purchase orders, payments, receipts, and a few others that are not so day-to-day, maybe like checking transfers for some people, or interfund transfers. Not your everyday transactions, but essentially anything that in Chapter 3, anything that you posted as a transaction becomes part of your permanent records. And once it becomes part of your permanent records, well, there's only so much you can do with it. Sometimes you can void it out and get rid of it, and sometimes you can. Sometimes you might have to make an adjustment or reverse the transaction if you've had a problem. So that brings us to Chapter 4, the accounting utilities. And this is basically your fix-em-up area. But it's not only that. There are some routine processes or things that you take care of or under accounting utilities, such as with purchase orders. You'll periodically want to review them and close any purchase orders or blank certificates that you're going to discontinue using, so you can free up the appropriations to be spent somewhere else, for example. So we kind of say it's a place to fix problems, but sometimes it's just a matter of routine. But overall, it's not part of your day-to-day routine. So, as you can see, this goes from page 68 to 90, and we're gonna break this down into three lessons, 3 sections. And so, what I'm going to do is cover the overview and through page 75. Through the investment transfer utility. Those aren't your common everyday activities. So I'm going to skip over those first, and in the first lesson we'll discuss receipts, purchase orders, and payments. Then we'll discuss some of the less common utilities that you would use. And then lastly, we'll go over the bank reconciliation and the bank reconciliation utility. Bank rec is not really a utility. We kind of threw it in this chapter because there's a utility associated with it and had to group it somewhere. I don't know. And we haven't done a bank reconciliation yet. So there it is. It's part of that, and that'll be in a separate lesson. So starting off, I'm going to go to the overview. So I'll click on that in my document. It should take me to the overview. Well, I cut and paste these first page and a half from the Accounting and General Manual. So it's in, if you want to look at this later and you don't have this booklet, it's in the Accounting and General Manual. When you click on Need Help, it's at the very beginning. If you scroll up to the very beginning of the Accounting Utilities section, you'll find that. So I went ahead and you can read over this. I included it in the book. It gives you a nice summary of every button. That's what we're looking at here. Every button that could be used in any of the utilities. Not every utility has these buttons, but if they do, this is what that button does. So you can read over that. We're going to discuss it as we go through. This little bit here, this is not included in the Accounting and General Manual, and as far as I know, it's not anywhere else. Here on page, well, it starts on page 69 and on to page 70. And that maybe is something I'd recommend to put a little post-it or a bookmark in your printed copy of this handbook. It's along with the other reference material. This is just this is just a little bit of a summary where we say, okay, what utilities use the void button and etc. And I kind of explain your different options. I'm not going to go through that. read through that in class today because we're going to touch on it as we go through every section, but I want you to be aware of it. It's a good reference, a good page and a half reference tool for understanding this material. So we're going to start off, like I said, with the more common utilities that you would use. Let me go back to the front of the book here, and I'll just jump to, actually what I'm going to do is we'll go over receipt utility. I will even jump around within this lesson, receipt utility, purchase orders, and payments. So it's intentionally to do a few things in order. So we'll go to the receipt utility, and I'll try to remember to give you the page numbers. On page 78, that gives you a summary. Basically, you can reallocate any type, or you can use the utility for any type of receipt, whether it's a memo receipt or interest receipt. So let me get to our software. And I had a few things that were still open there. All right, so we would go to accounting, utilities, and then alphabetically, receipt utility is the bottom of the list. So here are all of our receipts thus far. Now, you may notice something. In the last chapter 3, I left off. I had done a lot of things different from the book, and basically this data set is different. So you're going to see some things that are similar or identical to what we've done thus far in class. Others I've added so that I can illustrate some other points. And also I just loaded a data set which changed the post dates to when some of these transactions originally occurred way back when, because we're going to be doing a bank reconciliation for February. So we didn't put an entire year of transactions in here. In other words, here's just a sample, and it's a little different than before. All right, having said that, so no one should be thrown off by that. It's a little bit different, but I'll point out the similarities. We've got our receipt utility area. Again, it's under accounting, utilities, receipt utility. And again, these are all of the receipts that we have posted. Now remember, and this is kind of in that reference page at the beginning, this is everything that's posted. So under transactions, if you go to receipts there, if I had anything listed here, this would be some receipts that are in batch or have not posted. So most of the time, I would imagine this area is going to be blank, unless, except for the days when you're actually adding new memo, standard, or interest receipts, and it's a work in process, or it's in batch. So again, you can read back at the beginning of the utilities chapter where I mentioned that. And one of my main points there was that when it's still in when you haven't posted anything, whether it's a receipt, purchase order, or payment, if you haven't posted it yet and it's in batch on this list under transactions, it hasn't become part of your permanent records, you can delete it. And we purposely named that differently than what you'll see in the receipt utility, which was what we call voiding. So in batch, it's delete, and you kind of catching it before it becomes part of your permanent records. But in the receipt utility, it's already part of your records and already affected your cash balances. And if you're going to remove it, it would be by using the void button. Okay, so we've got a lot of different buttons here. Reprint is a real easy one, and this applies to some of our utilities. Like receipts, it's not a negotiable document, it's just a record that you deposited the money at the bank and recorded money in UAN. So you can reprint any of your receipts. You just click on the receipt print button, click OK, and it'll print another copy of any receipt that you've entered in UAN. Don't have my printer on, so we're not going to see anything, hear anything print. Then there's the the buttons you're used to display. That's going to display the receipts, all receipts that you've posted. So maybe there's sometimes you want to print a report for this kind of thing. Sometimes you can just go through and review and display the items, see everything you've done with receipts. Obviously, mid-year you're going to have far more receipts than this for most entities. Okay, so in our first exercise, we reallocate a receipt. Well, notice right here on the left we've got, I'll go do a void a little bit later, but we've got an adjust and reallocate button. Well, adjusting a receipt is an increase or decrease to the cash amount of that receipt, while the reallocate button is to doesn't change the actual dollar amount of the original receipt. So this would be an increase or decrease to the original dollar amount of the receipt versus reallocating. Well, that's moving the revenue or the money that was receipted into different account code. So it's allocating it to a different account code. And you can do that even after a bank reconciliation post. Now, once you post a bank reconciliation, you will not be able to void, and you've cleared that receipt on the bank reconciliation, you'll not be able to void that item. So if you look at the status here, whenever you see the word outstanding in UEN, it's referring to the bank reconciliation and whether you have marked that item as something that you're confirming this did clear at the bank versus it was processed in UEN but maybe as a deposit, in this case deposit in transit, and so outstanding. Now they're all going to be outstanding. We haven't done a bank reconciliation yet, so all of our receipts at this point are outstanding. Here we've got our receipt numbers. So our first example is to reallocate a memo receipt. And we can see from the exercise description on page 78, the county auditor notifies the fiscal officer that there was an error on the property tax settlement statement. Some revenue was distributed incorrectly, and so the memo receipt he previously entered this fiscal officer previously entered was incorrect. Select receipt number 5, 2011, and click the reallocate button. Okay, so what happened here? So the auditor notifies you, hey, it was our fault. The settlement sheet we gave you didn't have the wrong amount, but we indicated that the wrong amount distributed to the various funds. You already entered that receipt. Could have possibly even cleared it at the bank reconciliation, but now you're just getting this news. Well, you can reallocate it. So you would select that receipt, and this is the exact same one, by the way, that we did in our exercises. And then you click on the reallocate button. And notice this looks very similar to your receipt, the original receipt. Actually, I'll go there under Accounting Transactions Receipts, and I'll show you what a memo receipt looks like. If you recall, it's got the distribution and the memo charges, so the revenue and the appropriation code sections all on the same page. Whereas this is a little bit different. In order to use the space on the form a little bit more efficiently, it separates the revenue distribution from the appropriation memo charges. So we've got a tab, so be aware that this tab is available for memo receipts. All right, notice that also several of these sections are read-only. I can't type over the purpose here. If I try to, nothing happens. Read-only. And there are some required fields. Well, you have to put in a purpose for this adjustment, which it is adjustment, a reallocation adjustment. So we're going to put in the purpose. It's correcting tax allocation error. And then you have to put in the date, which we'll just select today's date for everything. And you can backdate these as as well, I believe, back to the last bank reconciliation. All right, now notice that we've got on the right-hand side the original receipt information, all the dates. You can't change any of that. It was a memo, the current the total, in other words, the cash increased by $89,200. That was the amount of the check. The amount of revenue was $90,000. But remember, we had charges of $800. None of that will change with this reallocation adjustment. Now, notice the column for revenue distribution or receipt distribution. These are the original accounts, and I can't change this either. I try to type over it, or it won't allow me to delete it. There's no delete because it's going to retain. You're not actually changing the original receipt. This will be listed on your reports as an adjustment to the original receipt. So you're not actually modifying originally. In a sense, you're adding an adjustment, which basically changes your account distribution. So here we've got the current amount, or the original receipt amount, distributed between these two funds, account codes. And then the revised amount will be whatever we input in this adjustment field. So just to demonstrate, I'll type in $1 on the adjustment, and you notice that that increases to 60,000. Or let me make it a little bit more dramatic. I'll type in a lot more, and so our revised amount increases here significantly. You can see there's a difference between my revenue here, my revenue here, my new revenue. If I try to post this, it's not going to let me do that. Revised receipt must equal the current receipt. And that's because this is a reallocation, not an adjustment, plus or minus adjustment. So I need to maybe follow the book this time. And according to page 78, the auditor says that we should correct the property tax real estate, add $1,000 to the general fund, and decrease the road and bridge by $1,000. We can see the before and after once I post this. Now I could post this right now, and it would post without even doing a memo charge adjustment, but I'll add a memo charge adjustment. If we look over here, original receipt, we've got 500, 300. And so on page 79, I'm going to add $20 to the general fund, press the enter key, moves me to next field, then minus $20 from road and bridge. And notice, click back here, now that is just looking back at the old error when I posted, but it will post now. And the reason it'll post now is because there's no changes to the bottom line. These are identical, and that's the way it should be. I've just moved it around between accounts. Now let's say maybe I needed to decrease this by 2,000, and then allocate another 1,000 here and another 1,000 to a different account code. Well, I could do that. I could add, I'm just picking account code randomly here, and I could add an account code, pull it up to my grid, and I'm back and posted. It started off with a 0 amount, and now I've got 1,000 in my revised amount. So I decrease this one and reallocate it to different account codes. I can do that, and I can, if I say, well, that was a mistake, I can get rid of it. Or I might, if I go to my charge distribution, there maybe I need to reallocate this again. Maybe this was minus $40. I need to allocate that other 20 somewhere else. Well, I could add a BC, or if there was a purchase order open for this vendor or source of revenue, which would be vendor for a purchase order, then I would have that as an option. These happen to be direct, but it might require, some of your adjustments might require a BC or a purchase order for certain memo receipts. If that's the case, I could select it. Or just like with all the other examples regarding these with payments and so forth, memo receipts, I can use the import purchase order button and copy that over from my existing purchase orders with unspent balances. I'm not going to do that. I'll won't save that, but that's available for that. That's why we have that in this screen. And I'll change that back to minus $20. All right, so now we're back in good shape here. It's these amounts equal this amount. We're just reallocating it, and I'll click on the post button, and maybe I goofed. Oh, I forgot to change this back to 1,000. So they didn't match up. Now it equals. Wasn't even looking. 90,000, 90,000, 800, 800, and my amount of my cash is increase was 89,200. So I'll go ahead and post that. You can print a report. Good idea for your audit records. And get out of receipts. If I go and look back at that, under display, it shows me the adjustments. If I do more adjustments in that year, it'll summarize those adjustments in this column. All right, so that was exercise number 1. And then exercise number 2. Well, in this exercise, we will refund a deposit that was held for the rental of the township hall. Okay, so that's from the Parks Department, and we can see that was a receipt for $150. I'll click on the Adjust button, and this was a standard receipt, so there's no memo charge area. Rental for the township hall. So what happened in this case? Well, a customer rented our township hall for some use, party or something, and they paid $150. But apparently $50 of that was a deposit. Well, they've already used the hall and no damage was done, so we owe them $50 back. It was just a deposit. Well, originally, we might end up keeping that money if they did any damage. That's the whole purpose of it. So we receipted that as revenue of $150, and that increased our cash balance, and it looks like the general fund, by $150. And that was an accurate way to receipt it. But now we would have just left it that way if they'd done enough damage and we just kept the deposit and give them a refund. But they treated us good, treated the town hall well, so now we owe them $50. Well, a common mistake, especially for new fiscal officers, is not to do this. A common mistake is for fiscal officer to go to accounting transaction payments and just cut the post a check for $50 to that resident who rented the township hall to get their money back. However, writing them a warrant would be a mistake. Well, we need to get them their cash, but if we post a warrant, what does that do? That increases their expenditures, but it's really not an expenditure, right? I mean, this was revenue that we received, and we're just basically handing it back to them. So it's not an expenditure, and not only that, but if we left this alone, this Parks Department receipt, well, that would inflate our revenue as well. So we're basically inflating our revenue and our expenditures both by $50. So that's the wrong way to handle it. This is how you would get them their money back, decrease your cash balance in UAN, so it matched the bank reconciliation, and decrease your revenue and without incurring an expenditure. All right, so you select the item, click on Adjust. We can see here the original standard receipt. Can't change that. We'll put in our purpose, which is rental deposit refund. And then we'll just use today's date. And again, just like with the other example, you could add a revenue account code here. If you're doing, well, I won't go through all the possibilities until later, but we've got our original rental and leases, right? Our original account code that was charged, and we want to decrease our revenue by minus $50. That's the amount of deposit they're getting back. So that revises the amount by $50, And notice here, it actually does change our actual dollar amount of the receipt. If we did not do that, it would post an error message. Maybe if I added an account code and tried to reallocate it in this screen to a different account code, do that, $50. Then again, we're going to get an error. The amount you've entered can't sum to 0. You have to adjust it. So what I'd be trying to do there is reallocate something. That's not what I'm trying to do. I want these amounts to be different. So that looks good. So I'm going to, when I post this, it'll decrease my cash balance and decrease my revenues, but I've got to be careful because now in certain circumstances that's maybe what you want to do, but in this case we want to get them a check, right? This person wants to cash their check and thus decrease the cash at the bank as well for us. So in this case you would click on this checkbox, print a refund warrant. Notice it says refund warrant tab. Notice when I click that or unclick it, it opens up this tab, refund warrant. And when I click on the tab, it displays the original source of the revenue is going to be my payee when I post this and prints a check. Well, that might be the case often, but in our situation, this actually came through. They paid the Parks Department, and then the Parks Department sent us the money, the $150. So that wasn't the original source, at least the way we received it in. This actually came from, so we actually want to get a check out to John Q. Public. Then the only required field is the payee. So you could include address information on the check as well. We'll leave it that way. And so that's still there. We'll come back and we see our check will be for $50. Give us make sure you put your warrant in the printer, and it'll print to that warrant. Print adjustment report is a good idea for your records. And then you can come back here and see the adjustment. Now, what could be some other reasons why you would do this adjustment? There are some other reasons you might do an adjustment for, say, let's see if I look at a type of another standard receipt. Probably not the best example. Now that's from 2000. Well, that's a good point right here. If I select, notice the receipt number is 2010, not 11. And if I click on the adjust button, it gives me an error message. I can't adjust a receipt that was not posted in the current processing year. And then it gives you, to do this, you'd have to do this as a fund balance adjustment. Well, normally your receipts from a prior year won't even show up on your receipt utility. This one, however, for whatever reason, it was outstanding as of the end of December 31st, 2010. So we haven't cleared that on the bank reconciliation. I can't make an adjustment until I have to make an adjustment on a prior year receipt in a different way. Can't use the utility for that. But I guess I'll just look at this Parks Department receipt again. Won't make sense for this example, but let's say another example might be just simply a bank error. If the bank errors, let's say this was deposited for, we can ignore this part for a moment here, the other adjustment. Now it's bothering me too much. I want to use a good example. We'll see. We'll just use Emmett Smith as an example. Well, let's see. I deposited this at the bank for $10,000, and in reality, the bank actually included. It should have been included a few pennies in that, like as 10,000, 11,005, right? Well, that's the wrong idea here, 0.05. Well, I call a bank and they say, well, anything over a couple dollars, congratulations, you just got 5 cents more at your township. You know, they might have that policy, or it might be the other direction. So that would be a reason why you might have a positive adjustment. You're not going to print anyone a refund warrant, or a negative adjustment in the same type of circumstance. Other reason might be that you just simply entered it in wrong. Maybe it was $1,000. What should have been $1,000.05, and when you receipted this in, you left off the 5 cents. You never found the error when you did the bank reconciliation. That kind of thing can happen. You can make an adjustment in the screen. Generally, except for some people who do a lot of those refunds in certain situations, generally you don't use this adjustment utility very often. I'm sure you guys can think of some other unusual examples, but yes, so you can a positive or negative adjustment on any receipt. All right, and lastly, you can void receipts, and whether, for instance, this interest receipt for the CD, click on void, select the date, you can backdate it, and you can read the note. We'll get to this when we get to bank reconciliations, but I'll just click OK. And then you can see how that is marked void. It'll still show up on your receipt utility list, but it's just marked void. All right, so that's the receipt utility. Let's look next at the purchase order utility. So accounting, utilities, purchase order utility, and this is jumping back to page 75. Go. So we've got a few notes there about the purchase order utility. I'll get right to the exercise. There are a couple things that this is actually a common utility. This you may not be fixing anything here when you go to the purchase order utility. You might just be closing your purchase orders. That's a routine thing that you do. Now again, it's kind of one of those things that's up to you, but it's a matter of how it'll benefit your township or village or library. Remember, your purchase orders are based on the encumber your appropriations, and if you've already spent if you have a $1,000 purchase order and you spend $975, and you're not going to spend any more on that for that company, well, you're still, until you close that purchase order, you've still obligated that money, that $25, to be spent at a company that you may never make another payment to. And so if you want to use that for some other, that appropriation account code for some other reason, then you would want to close that purchase order as soon as possible so you can free up the encumbrance. It'll become unencumbered, so you can encumber it somewhere else. So a nice way to do that may be going through this monthly. Another thing is just to clean house. Maybe let's take a look at this, the status view. Here it's filtered by open, but we can also filter it by expired. So if it's expired, I don't have any right now. Zero balance or closed. Well, I've got one of them I've already closed before class. And then I've got those with a zero balance. Well, with the zero balance, if we look at those examples under the display button, we can see, for instance, in this one, well, the original purchase order was $900. We saw in our payment example, we overspent that by $25. So it shows the overspent amount, and we have zero balance now. So I can't charge anything else to this purchase order 3/2011 for Buy-A-Lot stores, so I might as well close it. Also, the garden store, we had an example of that. That was one of our examples as well. We opened up a purchase order for $100. We spent all of that on the garden store for $100, so we have no current balance. This PO is useless to us at this point, so we can close it. So that's what I'll do. And you may just want to go through them monthly and take a look at this, or at least once a year in December, and close your purchase orders. So close the zero balance once. Close the purchase orders. We'll say OK. Select the date. Just make it today's date. And they're gone. If I go back to all, they're still there. But you can still find them in the software, but they're by default it's open, and so it's not going to list the already closed purchase orders. Now here's a few suspicious ones. This one's I've only got $50 left on it. I might want to, if I look at that, $450. I spent $400. Am I going to spend another $50 on with the company? If not, maybe so, but if not, then I could close this purchase order. Well, that was actually not our exercise on page 76. I'm going to get back to this exercise after we do our payments adjustments. So let's skip to exercise number 2, adjusting a purchase order. Well, as I mentioned earlier in class, and there's a typo on your book actually, on exercise number 2 it should be PO 6/2011. So that's this one. And on this purchase order, we've got, this is an example of adjusting a purchase order. So we'll select the item and then click on Adjust. It opens up the adjustment screen. And I'll put in, well, I won't put in a purpose. Let's see, our purpose is not as much shipping expense. And then I'll just leave that at today's date. So we can see on this one, our original is 1,000 encumbered. We spent $365. Our current unencumbered balance is $635, or I'm sorry, unspent balance. It's all encumbered. And so let's see what happens when I put in like a positive $100. It goes up to $735. If I try to post that, so it went from $635 to $735. If I try to post that, I get an error message. The adjustment cannot be greater than 0. You can only decrease purchase orders. You cannot increase their amounts. You cannot reallocate. The only adjustment you can do is decrease it. So notice this additional, by the way, is just a read-only fields. But so I can only decrease it. And in my example, I decrease it by $50. And I'm saying that, well, you know, I got another payment that's out there for maybe it's for $500 some, another $200, and maybe I feel I'm not going to use this entire $635. One of the payments that I haven't recorded yet doesn't include as much shipping expense as I thought. Maybe I got free shipping, you know, for discount or something. So I want to free up this account code, this account code that was encumbered in this purchase order, and I want to free it up by a certain amount. I mean, obviously this is a very small example. Maybe if you got one for $50,000 and you're decreasing the purchase order by $10,000, well, that would be significant. You would be freeing up this your appropriations to be encumbered for some other, well, for some other vendor. Because here I can only spend that this amount on this vendor while I have this purchase order open and have the unspent amount. So that's the reason you would lower it. is to, you're still going to use, I'm still going to probably spend the $585 for supplies or us for this vendor, but not the 50, so I can free that up to be spent on someone other, an expense of some other vendor. So I'm going to go ahead and post this, and it'll let me post it. I say yes. Oh, that's printing an adjustment report. So print an adjustment report for your records, and then you can see that under display that you adjusted it by $50. Okay, a really nice report related to the, well, I'll come back to this. Let's look at payments first. All right, so we'll leave that open and we'll go to the payment utility. So I warned you I was going to jump around a little bit. Payment utility starts on page 81. All right, in the payment utility, you've got a lot of the similar buttons here. Well, one distinction is there's no voiding a purchase order, right? You just close them or you adjust it and lower the amount. And I failed to mention that you can reprint for any purchase order, no problem. Send it to the printer. So that's about it for POs. If I go to payment utility, again, I can reprint certain payments. For instance, this is a warrant. If I try to reprint a warrant, I'm going to get an error message. It has to be either an electronic payment to reprint a payment type. In other words, electronic payment and UN is a non-negotiable document, just a record. You can reprint those. You can't reprint a warrant directly. You can reissue a warrant but not reprint. But I digress. I'll stick with the examples or the exercises first. Well, the first thing in the exercise you'll note is that there is a screencast tutorial for the payment utility on page 81. Mentions that, and that shows you how to do all of these as well, but from within the software. So you can refer back to that at any time. Purchase order utility also includes a screencast. So a lot of these videos after this class you can go and get a refresher with a lot of the same information. And then we have the in exercise number 1 we're going to have a payment reallocation. So let's take a look at these two, payment reallocation and adjustment. All right, for payment reallocation we're going to select the warrant number, or actually it's an electronic payment of 3/2011. So I'll select reallocate, and here again I cannot change the actual amount, dollar amount of this payment. This was electronic payment, by the way, but I can reallocate it to different account codes. And so here in the purpose of this one, it was an incorrect amount for part of the purchase. So incorrect account. So if we charge the wrong account, we can always go back in the current year and change it. If we go to the next year, this is not going to be available once we close the year. And then today's dates. And so here we've charged this account code, but we're going to say, so we've got all the original information here. Can't make any changes to that, but we can make an adjustment, minus $200. I cannot post this because it's different. It must be equal $400 after all is said and done. Well, so what do? I don't have any other account codes in this example. I can either use this option and select an account code from an existing POBC or a direct charge account, or I can use the import purchase order button. So I'll do that. and I'll select BC to 2011. That has the account code I need with an unencumbered balance. Notice I can't select the detail because, well, there's no place for the detail in the adjustment. It's just the distribution, the account code, or codes. If it's a blank, if it happened to be a purchase order, it's the blanket. So we import that, which just copies it to our screen. And if I made a mistake, I can click the X. Now I want to increase that by 200. So this is reallocating it to a different account code. Everything looks good, and I post. Print a report for my audit records, and that's reallocating. All right, adjustment is similar to what we saw with receipts. You can increase or decrease payments. So about reallocations, exercise number 1. The key thing to just remember it this way. You cannot reallocate purchase orders, but you can reallocate payments. So the charge, whatever purchase orders, basically if you use the wrong account code on a purchase order, you either have to lower it or close the purchase order and open up another PO or BC. Or if you have one open, use the other PO or BC, but you cannot reallocate. However, if you just want to reallocate a payment that was made using a purchase order BC, you can do that here under the payment utility. And then if we look at, let's see, go back to supplies are us here. I can make an adjustment at supplies are us for this payment. It's for $225. And let's say that, well, one example here is this was a manual check. Maybe I recorded this check for $225, or I hand wrote a check, that's what manual means, for $225, and I made a mistake when I entered it in UAN. Actually, I wrote it for $200. $225. We can just put in correction here. Today's date, and maybe it was actually handwritten for $250. Well, the bank already cashed it, and maybe I don't even find this until I'm doing my bank reconciliation, or after I never found it on the bank reconciliation. That $25 difference. Well, I've got to correct it somehow. I could either void the payment, or since the bank already cleared there $250, instead of redoing the payment and voiding it, I could do an adjustment and add $25 to reflect what the actual handwritten check was for. Or if it was actually only $200 and I mistakenly keyed in $225, then minus 200. So you're kind of seeing some consistency here. This is minus 25. So it would revise it to 200. Yeah. So we'll leave it at that. You could probably think of some other unusual examples of why you could make some adjustments. But again, with payments, a plus or minus to a payment, especially if we're a printed warrant, is going to be very unusual. In a lot of cases, what's more common with your warrants is that you're going to want to just void them, and if you've made a mistake, and repost them. If you haven't mailed that warrant out, or maybe if it was electronic payment and you haven't, you transmitted it but you entered it in wrong in UAN, or never transmitted it, well, then you're just going to want to void that. So you would select that item. Maybe with this one, I'll select it, click on the void button, select the date, and it'll void it. But I'll cancel that for now. Or maybe the other option you have, so let's say this one was wrong, and I void it. Okay, so I have to void it. Go ahead and do that. So now it's marked void. It increases my cash when I void it because it originally decreased my cash by $225. And then if it, again, I still have the check or I never transmitted electronically, I could go record another payment for the correct amount of $200 and post it, and I would correct it that way. That's the more common way to fix that problem rather than using this adjustment. And it makes more sense in a lot of circumstances. The other way might be with this check, and I believe this is a, see, this was a warrant number, 10,010, and if I look at it here, we can see that. So it's a manual warrant, or even a regular warrant, doesn't matter. So with the warrant, I would not reprint a warrant like I would do with an electronic payment. I cannot reprint it. But let's say, again, my coffee example from the past, I'm using that all day. I print this warrant, and then I spill a big cup of coffee on that warrant. I don't want to hand that to the vendor. It doesn't look too professional. I just want to reissue it, and I don't want to make any changes. It was for $140. It charged various account codes that are correct. No changes there. Well, then I can reprint the warrant. I mean, I can't reprint it. You get an error message if you try to do that. I can reissue it. And what reissuing does is that it will void the original warrant number, 10,010, and print to another warrant. So I put it in my reissue date. I can backdate that if I need to. And then make sure I put my warrants in the printer. Click OK. Skip a warrant if I need to as well. And it automatically voids the warrant, the original warrant, so we can see the 10,010 is voided. And we print it to the new warrant number, 10,012. I can send that to my vendor. All right, so receipts, purchase orders, and payments, your most common utilities to use. I think I've covered everything with payments. Close that. Covered everything under receipts. There's a few other things under purchase orders, though, that we're going to jump back to, and that is back on purchase orders. We're not actually, we'll do one of the exercise number 1 in a moment, page 76. Well, this is a nice feature. I can't really show you because it doesn't print to the screen. But print activity is actually a report, and it's the exception to the rule. Normally, your reports and statements are located right here. Here's a big menu for all of your reports and statements. But this is the exception. You can print a report from this utility, and this print activity report will print the activity for a purchase order or blanket and produce a copy of the purchase order. It'll print it out, which includes all of the adjustments that you made to that PO, maybe the negative adjustments, and all of the charges, so all the payments that you've made, you posted against that PO. So I think it's a very, very useful report. It's located right here in the utilities, so I don't want you to get away from this lesson without knowing that that's there, and it's very useful. If I click that, it just takes me to the printer. So again, I can't show you the copy, but I would say once you get some data in here, experiment with that. It won't do any harm to print the activity for your PO. If you haven't made any payments on it, it's not going to show, or adjustments, it's not going to show any activity. It won't look any different than just your PO. All right. The other thing I want to show you is a few reports related to purchase orders and appropriations. And the so we'll print a couple of reports here. If I go to accounting, reports and statements, appropriation reports, they're both located here. We've been looking at the appropriation status. That's one of our big 6 reports. And I'm going to select a couple of account codes. We've got, let's see, Account code I want is 100110.410. We'll see the relevance of this in a second. And then 4301.760. So I'm going to display the appropriation status for that. Zoom in a little bit, maybe. And I'm going to print another report under appropriation reports. And this is one to write down. This is, I don't think we cover this in the book, but it's an excellent report. The Appropriation Open Purchase Order Register. It's one you can easily miss, but you'll find it's very useful. This shows you just the purchase orders that are open, as the name implies. And we're going to look at this one, this account code, and it shows you them listed by account code, appropriation account code. So again, 100110.410, we'll just display those two. All right. All right, well, we'll start off with this. So we've got a purchase order. So this is showing us the type, that a blanket certificate regular and a purchase order regular here. And these are the two purchase order numbers. This first one is a current year, 2011. It's got an opening balance of $1,000, and we haven't spent any of it. It's got a $1,000 balance. This one, and also, now there could be other account codes on this. Well, not on a blank certificate, but if it were a purchase order, there could be other account codes, but it's not going to list here. It's going to order it by the account code. So basically what this report does is it says, for this appropriation account code, what purchase orders are opened related to that PO. And if there are 10 purchase orders that have encumbered amounts on this account code, it'll display all 10 of them. I'm sorry, yeah, all 10 of those purchase orders are blankets, not account code. And then we've got this capital outlay, which is a prior year. You can see by the 2010 numbering scheme and the date, issue date. And so that had an opening balance, and we've been working with that one. $300,000, spent $250,000, and our available balance is $50,000. So I'm telling you, this is a very useful report. We'll see why. And then if we look at, oops, wrong one. We look at the appropriation status for those two codes. Well, there's our account code, office supplies. So this would, not looking at purchase orders at all, but we're looking at our budget amount. Well, our current year budget, the final appropriation, is $2,000. Our current reserve for encumbrances, so the sum of all of our purchase orders, happens to be 1, is just $1,000, so we've covered half of that. We've spent $925. And so our unencumbered balance is $75. So, and so actually what that means is that our current reserve for encumbrance is $1,000. I meant to actually show you this. The reason why there's a difference between, so this is basically 1,000 minus 925 equals 75. Now you might ask, well, what happened to that other 1,000? And oops, I meant to show you that. We had, on the other screen, we had another $1,000 that was encumbered and then spent. So that's not our current encumbrance. We've already closed a purchase order related to this. So we had a budget amount of $2,000. We already encumbered and spent. Now I take that back. Take that back. Well, I am missing something here on the screen, which is showing the difference. Oh, yeah, unencumbered balance is 75. I'll have to take a look at that. I think I'm missing some information on this related to this. So we have a budget amount of $2,000. Okay, I'm so sorry. I was confusing myself there a little bit. So let me start over. I apologize. If we look back at this purchase order, it's open, but we have not spent any money, this $1,000. That's using that account code. If we go back to the appropriation status, that $1,000 is represented right here. That's our current reserve for encumbrance. Now, apparently we had another purchase order, and that was open, or maybe direct. This is not a direct charge account, I don't believe, but another purchase order, BC, it was open, and we spent $925 using this account code. I believe that was one of our examples where we had 900 PO and we overspent it by 5%, and so 900 has been spent. So 1,000 plus 195 is the amount that was either encumbered or expended. If you subtract that from the 2,000 in appropriations, that gives you your unencumbered balance of $75. So this amount here has not been spent at all, and we can see that by looking at this open purchase order. All right, so let's watch what happens after particularly after on the appropriation status, after I close that PO. Let's say well, it's a blanket, but work with me on that one. If I go to my purchase order utility and select the blanket certificate related to that, which realistically we'd probably be closing this because it was made out to a particular vendor, but again, let's say this was made out to a particular vendor and we're not going to actually make any payments to that vendor. It was made out by mistake, and we want to free up that $1,000 to be appropriated somewhere else. Well, there's no need to adjust this because we're not going to. We could adjust this down to 0 minus 1,000. But no need to do that, because if you do that, it's the same. It does the exact same thing as closing it. So I'm going to go back to that PO or blanket, click Close Item, date, and now if I look at my appropriation status for 1,110,410. This is what I see. 2,000 in the final appropriation. We spent 925. Currently, we have 0 encumbrance, reserve for encumbrance. So I closed the PO, so it freed it up. And so now instead of $75 unencumbered, I have $1,075, and I can create another purchase order to some other vendor for up to $175. So that's the advantage of, mid-year, maybe closing a PO or BC that you have no use for, to free up that encumbrance. Now the same thing can be done. Now if we look at this, so we go back to our other example, this capital outlay, that was a prior year purchase order, and there on our appropriation status, the old one before, we've got, it was reserved last year, $30,000, and currently we have $50,000 of an encumbrance that we could spend we could pay to the sewer replacement guys, because that's the vendor, the sewer guys. That's the vendor on the purchase order, the carryover from last year. We can't make out a check to anyone else. Well, here's the problem. We've spent that $250, the project's done. We don't owe them any more money ever, but we've got this available balance of $50,000. And back to the appropriation status. Although it's not showing, I've got the reserve, nothing's unencumbered to use anywhere else. So I'm going to close that prior year purchase order. Let me sort by, there we go, 1/2010. Closing it here in 2011. So now it's closed. And let's take a look at our appropriation status. It won't show up on this report anymore because it's not open anymore. So I look at my appropriation status, 43,760, that was the account code. And this is the after appropriation status. 300,000 originally, and now something's happened. It moved from current reserve for encumbrance to reserve encumbrance adjustment. So that closing of it wasn't an adjustment essentially. If I did an adjustment for negative 50,000, it would have done the same thing here. Our year-to-date expenditures were 250,000, but didn't do the same thing as my current year. When I closed the current year purchase order, it didn't unencumber anything. No unencumbered balance. I cannot spend that 50,000 anywhere else. Well, even if I close the PO. So it's an important point to remember when you're doing your year end that now it may be very necessary to keep it open at year end, like a purchase order for some large, huge project like that, because it could some projects carry over from year to year. It might take 3 years to complete, and you got that PO that you opened and was truly encumbered in a prior year. And so it's appropriate to do so, and sometimes you can't predict that. So predict that the amount over the period of years exactly. But you have to be aware of the fact that even though it's September 2011, that $50,000 will not be available to appropriate for the rest of the year until I close 2012, and then I can appropriate whatever, I start my budget all over again. That's enforcing a accounting practice, principle and practice that the auditors would like us to enforce. And so just understand that principle. If it's something that is negotiable where you could lower the PO, maybe you knew at the end of the year in December that it was opened earlier in the year, January, and then at the end of 2010 you knew, hey, this is going to be, it's not going to be 300,000. It'll definitely be 250 probably, but absolutely no more than 275,000. Well, then in 2010, what the fiscal officer should have done is, if they knew it wasn't going to, absolutely not going to be more than 275,000, they should have done an adjustment before they closed the year under the purchase order utility and adjusted it down to 275. And that would have freed up that 25,000 for them to appropriate in 2011. All right, so I hope that makes sense to you. I'm not saying that I'm definitely not saying you want to close all of your purchase orders in blankets necessarily at the end of the year. It's a good practice to do that for those that can be closed, but it can be a good practice. I guess it's a matter of opinion. But you have to. I just want you to be aware of how that works when you close the year end. That anything that carryovers to next year, it's encumbered in that prior year, and even if you close that encumbrance in the current year, it doesn't free it up until you get to the subsequent year. So be aware of that dynamic there. All right, so that's it for the part one of accounting utilities. The other utilities, I guarantee you, will go a lot faster than that. So I camped out on that PO issue for a while, and so we'll continue in the next lesson.